How much new information do you think there is in what President Trump had to say about his comfort level on a weaker dollar?
Not much. It's hit a market that was vulnerable already. We've been talking a lot on the show recently and over the longer period of time that, dollar is in a structural downtrend that started at the start of last year. We kind of paused a bit in the second half. We talked a lot about how we expected 2026 to be another year of depreciation for the dollar. It obviously was particularly weak in the wake of those dollar-yen rate checks last week. And then suddenly we got this comment which kind of encouraged a market that was vulnerable. But really, there's almost no informational value, and it should be probably completely discounted. What I mean by that is Trump's, welcomeness to a softer dollar is not new. He's constantly expressed that. And as Robert Kaplan outlined, Trump wants to remake the US as an industrial powerhouse, but in reality, it's financial services is power. And so therefore that trumps the kind of export spaces as Robert Kaplan outlined. But that's not how Trump sees it. So this isn't a new view from Trump. And I think that in context of the latest dollar weakness is with the context that Trump's policies have been slightly undermined. He had to backtrack on Greenland. He's kind of slightly de-escalated when it comes to Minneapolis. He threatened Canada with tariffs that was kind of ignored. He threatened Korea on tariffs and the stock market boomed. So in the context that his comments are being slightly undermined, why are we suddenly putting so much weight in him reiterating an old view? I don't see why. So for me, I am bearish the dollar structurally, but I don't think this is a reason to sell the dollar.
Mark, there's so much going on. My head is spinning. I'm trying to get a handle on kind of where's north. Are we comfortable with the level of risk in these markets? How over our skis are we? How unbalanced do you think everything is out there?
I'm really struggling with this, Guy, and the kind of the trader inside me, the trader background of me is a little bit nervous by the pace of gains. We talked a little bit on the show yesterday about how we think that the macro backdrop is very supportive for global investors. We think the rest of the world continues to outperform the US, and we think that's a dynamic with legs. So everything that's happening makes fundamental sense. But just really the pace of gains in many assets, it just is unsustainable and it's crazy. But what's going to turn it around? I'm not expecting the FOMC to be the event. I'm not expecting earnings to be the event. So basically, I'm a little bit nervous here as a trader, and I think it's very hard in short-term moves. But as an investor, I wouldn't panic yet. It's not a reason to suddenly go, this is over the skis just yet. At some point, that will come.
Was any of your panic assuaged, Mark, by the auction, the 40-year auction in Japan?
Yeah, actually, that's a good question, because I thought that was going to be one of the main catalysts this week for risk. And actually, that went really well. And so that's a real positive. So it seems like we're not going to attack the bond market this week. If we are looking for a vulnerability in the kind of whole infrastructure, something that kind of flows through various asset classes, it would be if the bond market comes under attack again. But in fact, the bond market's been incredibly stable over the past few days.